Good morning everyone, and welcome to the PivotBoss pre-market video for Friday, May 15th, 2020. Happy Friday everyone. I am Frank Ochoa, aka PivotBoss, and taking a look here at the ES in the daily time frame, you'll notice that the ES is currently trading right near the midpoint of the previous day's rejection. This is the previous day's rejection day right there. The midpoint of the previous session is right here. That's 2807. We're coming into that zone right now. That's a very important midpoint, because after a rejection day like this, where it took out the prior low, the prior week's low, and rejected back up, any pullback to the midpoint could become the best buying opportunity for a continuation higher. This is a deep shakeout leg, but it started with a failed high. And that's what makes this a bit trickier, is that a failed high. It came up here above the high and rejected hard and fell. And now if there's a failure to hold 2807 or a failure to maintain acceptance above that zone, this could easily turn into a bearish outside day. So that midpoint is very, very important as of right now, given the fact that we have been trending higher for a while now. We have seen higher highs after every 2 or 3 day rotation back down. If it can hold that midpoint, and given this pullback here, we may see a return back toward 2940 to 2950. So this could be a very good bounce play off of the zone. Again, 2807 needs to be held. A failure there could open up a significant bearish outside day. Okay, let's take a look right now at the NQ here. Now the NQ had a pretty significant rejection day in the previous session, but it really followed the lead of the ES. It wasn't as strong. We did have a nice rejection off the previous low right at the previous month's close, and that we caught early in the trading room yesterday and got it right off the lows. Great bounce the rest of the day. Here what we're seeing is a failure at the previous high and a rotation back below the midpoint of the previous session here. So we are already below that midpoint. That is very significant. Got to continue to keep an eye on that midpoint there. It's 75.5. Right now there's a lower low that is developed below that midpoint, and if price starts to push back above that midpoint, it could begin to mark a push higher for the day, and then perhaps heading into the next week of trading. So after this pullback week here, are we about to see another move higher here, as we have seen after each of these pullbacks before, or this price close below this midpoint and turn into a bearish outside day that violates the previous month's close and leads price lower? So right now this midpoint is going to be very, very important. It's 89.75.5, and right now with the lower low failure, we could be looking for a test at that level very, very soon. Alright, let's take a look now at crude oil. Again, this is the July contract of crude oil. We've quantified this range as being very narrow. On an 8-day basis, it's narrow, but because the breakout occurred on the 8th day here, 1, 2, 3, 4, 5, 6, 7, I went ahead and did a 7-day range right here. You can see it was 61% of ADR now, but before it was much more compressed. Now you see the breakout that's occurred in the previous session. Price has to hold the 27s here on a retest. That's where the breakout occurred. The midpoint of the previous session is 2692s, I believe. Yes, 2692s, and we're holding completely above that zone. So right now, any drop into 27 could provide a bounce opportunity for a move into 31 or higher. Now, if there's a failure to hold 27s, say this day becomes a doji type day and we start to break down the next day here, that could open the door to a return back toward 22 and perhaps quite a bit lower. So right now, got to keep above 27. That's the key level here. Alright, let's take a look lastly at gold futures. Gold futures has recently rallied here. It had a nice 15-minute rejection signal about an hour ago that fired off, and this thing rallied pretty nicely. Overall, this thing is pushing higher. One thing we talked about before was that we had been very, very compressed, but perhaps this breakout through 1715 was going to trigger a move to 1740. And if we can get through 1740, perhaps we start testing the upper end of the range between 1760 and 1780. As I have mentioned before, we were trading within this larger trading range, call it right here 1785 down to 1660, right? And then we went into the smaller range, so that's why if we can get above 1715, we get to 1740. If we get through there, we start working in the upper echelon of this range here. So overall, this market continues to be bullish at the moment. We've gotten a very significant breakout, at least near term, but soon it may be time to take some profits here, as price has not been able to stay above 1760 for very long before rotating back down. So keep an eye on that zone right there. 1740 remains the key level to watch on an intraday basis for directional bias. All right, that is it for now. We'll see how this develops the rest of the session. Have a fantastic weekend. And again, please be sure to like, share, and subscribe. And I will see you in the trading room. Take care.